YouTubers! Mike Martin's here, Mike Martin's channel. Man, do I have a great article for you guys. Steve the plumber sent this to me, and when I answer the phone, I'm like, hello? He goes, woo! And then I'm like, what's going on? He's like, well, Mike, you gotta see this, because I know you're the woo king, but this is a pretty big one, man. So people living in Canada, brace yourselves, because this is a big deal. Credit concerns emerge in Canada as TD Bank and CIBC miss estimates. What are they talking about, people? Well, they haven't did their math right, is basically, if you want to get down technical to it. But what are they missing and what are they not telling us? Let's find out. Credit quality is deteriorating in Canada and banks... Sorry, this thing keeps jumping everywhere. Oh God, why is it doing this? I'm just trying to get to the part here. Yeah, credit quality is deteriorating in Canada and banks are feeling the impact. Toronto Dominion Bank and Canadian Imperial Bank of Canada both reported physical first quarter results that included higher provisions for loan losses. Keyword, losses. Contributing to earnings that missed analyst estimates. Wow. So I guess if they were doing everything by the book, or they kind of misjudged a few things, or had a different category for bad debt. I don't know if they announced the bad debt or the bad debt was backed by security. I don't know. But let's find out. Toronto Dominion Canada's second largest leader by assets aside $850 million for soared loans in a quarter ended January 31st, up 23% from a year earlier, and the highest level in at least 2 years. The lenders' Canadian and U.S. retail divisions had roughly equal shares of the provisions, and about 36% of each of the total, with the rest recorded mainly in the bank's corporate segment. So it's in their sheets, it's in their balance sheet somewhere, but they're not finding out, pinpointing. You know, you got a bug somewhere, so you got to pinpoint where's the problem in the circuit. And then now they're trying to find out now it's bad debt or bad loans or defaults, people defaulting on payments. The fourth quarter and the first quarter of this year was always tend to have an elevated provisions because the holiday spending season. So we tend to see a seasonality in cards and auto. Toronto Dominion's chief financial officer, Riaz Ahmed, said in a phone interview Thursday, in Canada, bankruptcies are up a little bit. And we do see a little bit of rise in delinquency in our retail cards in the United States. None of them would rise to the level of being particular concern for us. So it's not that bad of a thing. CIBC's provisions more than doubled across the bank, surging $383 million, also the highest in the last 2 years. Most came from Canadian personal and small businesses banking. The lender's largest division, which saw a 41% jump in provisions to $208 million. Canadian commercial banking set aside $43 million for credit losses, while the U.S. division earmarked $16 million for provisions in its capital markets and markets unit, and $66 million partially due to one source utility loan. Strong credit quality. Provisions were hurt by three big non-performing commercial and corporate loans in different industries, were unique events and certainly not representative of any sign of underlying problem. CIBC CFO Kevin Glass said provisions for performing loans were affected by changing economic indicators, such as housing and oil prices, which he said also aren't in an indication any sort of concern. What? Housing is falling. Why isn't housing not a concern? I think that's a huge concern to take into factor. Our core businesses are performing well, and there are some unique credit events that impacted our results this quarter, he said over the phone interview. The bank's calculations for loan loss provisions in the year earlier period were affected by accounting changes. Toronto Dominion shares slumped 2.7% to 75.23 at 9:43 a.m. in Toronto trading, their biggest intraday decline in 2 months. CIBC fell 1.1% to $113.42. The two Toronto-based banks also followed their Canadian rivals in reporting poorer performance in their capital operations, driven down by trading in a period of company executives have called challenging. Toronto Dominion's capital markets results were the worst among the big Canadian banks, with $17 million loss in the quarter from its TD Securities business as investment banking fees fell and trading revenue has halved from the year earlier. So there it is. There's the TD and CIBC in their bigger provisions right here. And it's kind of breaking it down here for you. Wow. There's the financial reports. Swing numbers. Okay. The wholesale banking business is rarely part of the investment thesis for TD, but it nevertheless forms an impact part of the bank and one that can swing numbers. An analyst for CIBC Capital Markets said in a note, swing numbers, it did, moving to a loss that took an overall results notably below consensus, even before considering the higher loan losses. Trading revenue with TD Securities division totaled $251 million, down $515 million a year earlier. Toronto Dominion CFO cited significant market volatility for what he described as a challenging quarter. For the wholesale division, the revenue was down as volatile markets made trading conditions difficult and keep clients on the sidelines, Ahem said. So CIBC Capital Markets, meanwhile, had an earning of $201 million, down 38% from a year earlier, which banks citing lower revenues from equity, derivatives, and interest rate trading businesses, along with higher loan provisions. So here it is. There's other highlights. Toronto Dominion reported physical first quarter net income that rose 2.4% a year earlier, $2.41 billion, adding or $1.27 per share. Adjusted per share earnings totaled $1.57, missing $1.71 estimated 12 analysis in the Bloomberg survey. CIBC's first quarter net income fell 11% to $1.18 billion to $2.60 a share. Loss, and adjusted pre-share earnings totaled $3.01, missing $3.09 average, estimated $12. Estimated by 12 analysis from Bloomberg survey. Sorry guys, this is a mouthful here to read, but what is happening? Credit concerns emerge in Canada's TD Bank. CIBC misestimates. So what is happening, people? It is actually very bad. Congratulations to those that shorted the Canadian banks. Woo! I got a lot of friends that shorted all the Canadian banks, knowing that this is really bad. This is what's going on. So a lot of people have been shorting Canadian banks in their portfolios because they know things are going to hit the fan. So it's really interesting to see what's going to happen. Let's see what they say here. It's pretty much what I wrote or what I said in the video.
In the past hour, both CIBC and Toronto Dominion Bank have released results. They are disappointing, both banks missing expectations. Let's begin with CIBC. Adjusted profit for CIBC on a per-share basis coming in at $3.01 per share. That's 8 cents weaker than expected. It's also down significantly from the year-ago period when it was $3.18. Aggregate profit also down. Profit's not just down on a per-share basis, it's down on an aggregate basis as well. Adjusted profit, and there are some significant one-time items that need to be set aside to look through these earnings and understand them correctly. Adjusted profit, $1.36 billion versus $1.43 billion a year earlier. The dividend does go up. That is a bit of good news, as we told you at the top of the show, in the case of both banks for their shareholders.
So they're raising the dividends on it so they could attract more investors to come in and jump onto this great opportunity. Is it really? Or is it better to short CIBC?
Up by 4 pennies at CIBC to $1.40. Capital markets profit, this is the story for both banks. Capital markets profit, and we'll get Gordon Reid to weigh in on this in just a moment, down 38% for CIBC. It collapsed in the quarter. Canadian retail banking profit was up 4%. That's modest growth in the core Canadian business. This is the bank that is most exposed on a proportionate basis to Canadian consumers and small businesses. U.S. banking profit continue to do well. CIBC has fairly recently increased its presence in the U.S. with the purchase of Private Bank of Chicago.
That's right.
That profit line increased 24%. A quick look at the TD earnings. There's CIBC stock over the past year. All the banks have rallied earlier this year. We may see both these stocks come under pressure this morning. Let's take a quick look at what TD Bank has reported. TD Bank reported $1.57, a far cry from the $1.71 that was expected from analysts. The dividend does go up by 7 pennies. Capital markets was a disaster for Toronto Dominion Bank in this quarter. There was an absolute loss, an aggregate loss, not just a withering of profit, but a come down in profit so substantial that it was a loss of $17 million. A year earlier, the bank booked a profit of $278 million in that segment of its business. Canadian banking profit was up by 6%, so that was respectable growth here at home. U.S. banking profit, it depends how you look at it. With TD Ameritrade, which is the big and very successful discount brokerage in the United States, U.S. banking profit was up 21%. Without it, however, it was a very modest and not typical 4% profit growth for the retail bank of TD in the United States. Gordon Reid, let's get your thoughts. We knew you follow.
All right, guys, I wanted to throw this out there. Canadian banks beginning to fracture, the signs of a weakening economy, the signs of the Ponzi scheme coming to an end, the signs that not clear sailing on the horizon is what we're looking at right now. So I'm going to keep my finger on the pulse with this because the banking sector plays a huge role when it comes to securing your financing when you want to purchase your home or pay off your HELOCs, because that's what they're going to be announcing. I have a feeling that banks will be calling in HELOC mortgages in full. So I'll keep my finger on the pulse for you guys on this one. Let me know what you guys think in the comments below. Banks missed profit estimates by a wide margin. I think that's a big deal. Let me know what you guys think. Comment below.